Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have Kathy Fettke returning. Kathy is the author of the #1 bestseller, Retire Rich with Rentals, and has just launched a new book, Scaling Smart, which we'll talk about soon. She's a frequent guest expert on CNN, CNBC, CBS Market Watch, and more, teaching people how to build multi-million-dollar real estate portfolios. And she's the host of 3 podcasts. Welcome, Kathy. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah, I'm the co-founder of RealWealth. We've been helping busy professionals invest in real estate nationwide since 2003. So we had our 20-year anniversary this year, mainly 1 to 4 units, but we syndicate as well, and we've done some multifamily. But I think I'm best known for kind of helping gauge where the economy is going when it comes to residential housing, and then which markets to invest in.
Yeah, we've run into each other at a lot of conferences, and I love whenever you're speaking. I always get so much great data and information. So and we'll be seeing each other again at a conference in a couple weeks.
Yeah, I'm excited about that.
So talk to me about your new book, Scaling Smart. What's it about? And why'd you write it?
Well, we wrote it mainly because BiggerPockets has a publishing company, and they came and said they tested their market, and this was a topic people wanted. They wanted to know how to scale their business, but they also wanted to know how to do it without going broke, because that happens a lot. It's kind of like getting over your skis, and we've seen it a lot recently, certainly in the multifamily world, in commercial real estate in general. A lot of people basically taking on debt that they can't pay, taking on projects they can't finish because expenses have gone up and times have changed. So this book, Scaling Smart, which I've got one of the first copies, it kind of teaches you how to grow in a way that really uplifts your lifestyle instead of draining you.
And what were some of the mistakes that you made along the way in Scaling Smart? Because we've all made them.
Oh, yeah, we've all made them. And I think I got to be early to that game because, like I said, I've been doing this for 20 years. It all started in 2003 when my husband got melanoma and he was told he had 6 months to live. I had to figure out, how I was going to provide for our family. I had been a stay-at-home mom at the time, had a background in broadcasting. So I started to use my radio show, which I had kept while I was working at home, raising the kids. I started interviewing people to find out how they scaled, how they built businesses and were able to create this thing called passive income that I'd heard about. Thought this would be a time for me to learn that because I need to be home, take care of my family, but also make money. And so I just started interviewing millionaires, and they would share their secrets. This was kind of before podcasts. This is when the only way you could get this information was those meetups. They weren't even meetups then. It was just real estate investor association groups where all they did was sell these boot camps. And You had to pay $10,000 to $20,000 just to learn these secrets. So I got to do this on a radio show and make it free, make it public. And then I became one of the first podcasters when that became a thing. Rich, my husband, just took my shows and uploaded them. So Rich is alive and well today. The melanoma did not kill him. They were able, he's cured, although he's always getting it cut out. He has another scar today from getting that cut out. But I think to sum it up, I was an early influencer, kind of before social media was a thing. I was an influencer when podcasts came out and by having a radio show. And there was something about that had people trust me without doing any background on who I was or what I knew. I was lucky enough that in 2009, when everything fell apart, I had a really experienced developer come to me and say, Kathy, I'm getting deals for ridiculous prices, 10 cents on the dollar. Can you raise money? Do you want to partner with me? I was like, I don't know. So I sent out an email, and it turns out I raised like $3 million for this very cool project, like in an hour. But then I found out that that's not how you raise money. And that's actually quite illegal. You can't just send out an email and ask for money. So then I was one of the first to get an attorney, and I had to sort of trailblaze this process of syndication because there wasn't anyone teaching it. And luckily, he was the real deal. And luckily, I did my background checks on him and due diligence. He was a 40-year veteran developer, and we just killed it. We just bought stuff from banks, foreclosed subdivisions, foreclosed apartments, things that, literally 10 to 20 cents on the dollar. It's hard to go wrong on those. But then, as I was doing these successful projects with somebody experienced, I had other people coming to me who wanted to do the same thing. And that's where I messed up. I started to get too much out of my lane. I tried to get too big too fast. And not everybody had the experience he had. So I learned a lot over the years. I'm still dealing with some projects from 2012 and 2013. I've poured money into them to try to right that ship. So I kind of took these lumps early. And that's helped me to be smarter. It's why I was kind of able to avoid this last situation where so many multifamily investors are licking their wounds right now.
Yeah, absolutely. There's so many new syndicators. The gurus taught them how to get their first deal or even their second deal, but not how to manage the deal, not how to build a team. And to some extent, greed took over because they're doing these deals. They don't have the bandwidth to manage these deals, nor the expertise. So they've gotten into a lot of trouble.
Yeah, and investors too. I mean, I think investors have learned, they've taken some hard knocks. They were jumping into deals they didn't know anything about. So there was just a lot of lack of education and experience over the last few years, and yet lots of money. So what we saw is people who were just doing big deals, making big money, and then throwing that money all back in to do it again, but bigger. And it's almost like, gambling. You do really well in your first round, you put all your chips back on the table instead of taking some back out. And kind of that's the first chapter in the book. Scaling Smart is like, why? Why do you want to grow? What do you want from this? What is your end game? And it's very easy to have it be an ego play without you even knowing. You might think, I don't have an ego, but I feel it every day when I interview people on my podcast and they've got however many doors they have. Sometimes I'm like, oh, I don't have that many. I must not be as good of an investor. So there's an ego check that has to happen all the time. And what we need to be asking ourselves is, what do I really want? Do I really want 10,000 doors? Or do I really want more free time? Or do I want a certain amount of passive income that's going to free up my time so I can do other things that I really like? And until that is so clear, my why, like what is the end game for me? What is the ultimate thing I'm trying to achieve? It becomes very easy to try to keep up with the Joneses. That's why that's a saying. It's like, oh, you start to feel bad that maybe you're not doing what everybody else is doing. Did you notice that at all over the last few years?
Oh, absolutely. You catch, I've caught myself and certainly other people when, they promote themselves. I've got X amount of assets under management or X amount of units. And for a lot of people, Maybe it was a combined of passive and active, and maybe on the active side, they raised 500,000 so they could put $50 million of assets under management under their bio and an extra 400 units, but really they've done nothing but be a middleman and then raise a very small piece of money. So yeah, there
Yeah.
was like a race to have these big numbers. And at the end of the day, it has nothing to do, like you said, with quality or due diligence or anything like that.
Yeah, and it was really hard. It was a battle for quality, and it was almost impossible. A lot of people like Brian Burke and Ken McElroy, they just stayed on the sidelines because they had their set underwriting guidelines. And if they couldn't find projects that fit that, you just didn't do the deal. And this one syndication partner that I told you about that I met, in 2009, this experienced developer, I sat with him and I said, tell me your guidelines because you've been doing this so long. And he did. And he taught my team, here's what we look for. Well, there was nothing on the market, nothing. So I'm like, well, I guess I don't get to play this game. And now, of course, I look back and go, well, maybe that's a good thing that I sat this one out. Um, because like I said, we're still dealing with projects from 2012, 2013 that have been costly of my time, my energy. Investors are still waiting for their money. I've worked for free for years on those projects when I've got other projects that we were in and out quickly because I had the right partners. So that's another thing I put in this book is you can scale with the right partners and you can scale when you've got the right knowledge and information and structure and systems in place. But not having that, you might shoot up like a rocket ship, but you're going to shoot back down just as fast. We see it all the time. We see it all the time. And you could call it greed, but a lot of the people I know aren't really greedy. It was just more FOMO, I think, just like fear of missing out on opportunity and the fun of being in the game. Maybe a little greed, for some people. It breaks my heart when I see some of these kind of new syndicators that actually did do some good deals. They did, but then again, like they're like, okay, we're going to put our money back in and do bigger. And they weren't ready for that yet. They didn't have the experience yet. We also saw investors, like I said, in the book again is Scaling Smart, how to have a sustainable, lasting business, how to design a self-managing business. Like I said, first chapter is really knowing what a win is for you. A lot of people will say, I'm doing this for my family. But if you interview their family, they're like, we don't want this. I didn't want that new fancy car. I didn't want that new vacation home. I want my mom and dad home. I want time with my family, so we've got to check in. What is it we truly want? And then what is the business about? That's chapter 2. Where does this business really want to go and what's our focus? And like I said, I got off track on both. On the what do I really want? Totally lost track of that because for me it was time to take care of my family. Well, if you interviewed my kids, they'd say we didn't need all those things. We just wanted mom around. Fortunately, I did spend enough time with my kids that they're awesome and they're grown up and they've launched and they're doing great and we're very close. But it could have gone the other way, You have a short amount of time with the little ones before they're out. And if you don't get the first 8 years right, you're going to be paying the price for a long time, So it's all about really getting clear. So on the business, like I said, we weren't super clear about what our business was. So I tried these different things. One of the things I syndicated was a wine village. What? What do I know about that? And my partner had not done it before either. I mean, I look back at my younger self and what were you thinking? And what were the investors thinking who trusted us in this? Like nobody knew how to do that. Sure, the business plan was cool, but nobody really had pulled that off that was on the team. I'm embarrassed to say it, but it's just true. So
Yeah, I love how you talk about building a foundation. It's so, so important. And a lot of times we jump into things and just keep rolling with it and not have that strong foundation. And that helps you guide your decision making going forward. And if you don't have that's that, want to do more deals, bigger deals, like you said, versus why did you get into it from the very beginning? Is it if it's for your family, then maybe it's not going, 80 hours a week, full tilt, tons of travel because it's not aligned. And I
Yeah.
think you talk about that alignment of personal and professional vision. That's so important because otherwise you easily get off the tracks.
It is just so easy. So if it really, so, if it's for your family, talk to your family. Find out together, what is it that we really want together as a family? Do we want more time together, more travel, or do we want more doors? I think I'll know the answer. Yeah. And then,
And
yeah.
even if you want to do a ton of deals and you have the systems in place, then you hire the right team, and it's not all you doing the work. If you hire a really good team to do the work, then then you can make that happen too.
Then you do have freedom. And that's again why it's the subtitle is How to Design a Self-Managing Business. And this is really so scary for people to, to have somebody come in and do the work for them. And believe me, mistakes can be made, and we made lots of them, which I write about in the book. Hiring the wrong people or putting really good people just in the wrong position, or putting not the right people in the right position. So what I interviewed Ken McElroy. He's a multifamily investor, most people know, and he has scaled beautifully. And he kind of talks about how he did that. And for him, it was, kind of starting out really understanding every part of the business. He started as a property manager, and then he bought a small building. He property managed that. Then he kind of kept growing from there, but growing in a way that was not overwhelming. So he didn't go from, for example, 20 units to 200 units like so many people do. He scaled in a way where he could handle it. And then the next phase is bringing in people who can manage that even better than you. So what does that take? What's the process of hiring the right people and incentivizing them, having them treat your business like it's their business? So that is the key, and that's where you can really dramatically scale. We at RealWealth have figured out a profit sharing. So first and foremost, we started scaling when we started to bring our team into creating that business vision. Like, where do you see this company in 10 years? And where do you want it to be? And what would you be proud of? And for a lot of them, it was like, well, they were millennials, so they were like, we want to know that we've made a difference in the world. So we had 10% of our profits go to charities that they chose. And that really got them excited. And then, in our next annual meeting, it's like, well, what else would make you excited? Well, profit sharing. Okay, so we hired someone to help us with that. Now we have a very cool profit sharing program. And so everyone in our company is it's like they own their own little business within the business. They own this little part of it where they're responsible for certain outcomes that benefit all. Rather than we used to have like salespeople who were kind of competing against each other within the company. And that ended up being kind of too competitive. And this way, it's like, hey, everybody wants to make sure everybody's doing their job because everyone benefits. So that's just one of the things that we talk about is how do you have inspired leaders within your company?
That is great advice. That's we try to do it on our team. We also try to do it on the property management side too, because we value their opinions. They're there every day, and that little extra mile that they go for our property for the residents means we're more occupied. The renewals are higher. We get more referrals, so it adds tremendous rocket fuel, like you said, to any business, whatever you're in, to have that ownership thinking. So kudos to
Yeah.
you.
Yeah. And then honestly, the biggest one was getting me out of the operations, because the person who starts a business is a very different person than the one that keeps it running. And if the entrepreneur stays as CEO, and in my case, I'm the idea person. I'm the one who can wear all the hats and do all the jobs. So then I would kind of micromanage even like our email people, and even the people putting on events, I was micromanaging them. and and finally, I think Rich and I said, okay, we're going to go away for a month. We're taking the kids to Europe. can you guys handle it? And they're like, yeah, we can handle it. They were so excited we were leaving because we wouldn't be interfering with what they knew how to do. So someone like me who's a visionary has a new idea. Brandon Turner, great example of a visionary. We have so many ideas that it can really just drive our team crazy because they can't keep up with all these. They're trying to do yesterday's idea. Now you've got a new one that you need probably a new team for. You can't keep using the same team for all these new ideas because they'll never get anything done. So that is what we learned is like, I replaced myself with all the things I used to do. And I only go to our leaders now. We have leaders who manage everybody. I'll never go around them. We just talk to our leaders to make sure that they are carrying out the vision, but doing it their way. And then there needs to be a feedback loop for people who are being managed to make sure that they're really happy with the management. Because without that piece, you could have you might not know that the management's not working. They call it an end run in the book Traction of the visionary still going to the to the podcast editor or whatever. No. You go to your managers and they manage. Let them manage. That's how you create leaders within your company and invest in those leaders. Put them through any training that they want so that they can continue to get better and better because they're the ones who are going to take care of that company for you.
Yeah, Traction, great book, highly recommended. I think there was a quote out there that someone was concerned about investing in their staff. What if they leave? And then the response was, and what if they stay? If and you don't invest in them. So definitely invest in your team. Took me a long time personally. I've been an entrepreneur for over 35 years to stop working in the business and work on the business, getting yourself out, which is so important. That's when you can really have that exponential growth.
Yeah, absolutely. And then go put all that energy into another thing, but then you got to build another team because you can't keep telling the same team to do a bunch of different things. So it's exciting. And then finally, and we're not at this phase yet, but there is a phase where you can even sell or finance your company to your team. They can buy it from you, and then you're really just completely out, right? It's their company, and they're just paying you, the loan on it. So it's exciting to be able to build a self-managing business, and anyone who owns real estate should treat it like a business. We're not talking about real estate. We're absolutely talking about real estate. Whether you own single families, whether you own, 10 to 20 single family units or one apartment, you need a team, and that team needs to be incentivized.
Absolutely. And certainly, I think a lot of entrepreneurs make that mistake in the beginning. I know I've done it, where you're doing everything yourself. You're cutting corners and slow to hire, build out that team. And once you hire that person, you're like, I should have hired them 6 months ago. Like it would have. Thank God I hired them, but man, I should have hired them a while ago.
Yeah, I interviewed Jillian Hellman from Realty Mogul, and she got funding kind of early, kind of young, and so she hired these really high level people, and she found out that wasn't the answer either. That sometimes if you go institutional and you spend, I had a guy come to me and say, "Hey, I'll run all your systems for $500,000 a year salary." I'm like, no, we're on an incentive program. I found out later that his track record wasn't even that good, because on Wall Street, it's, sometimes these funds are so big, they don't even notice when there's losses. They don't care, right? So with Jillian Hellman, she said what worked for them was not hiring these huge executives from Wall Street. They nixed that, and they brought in people who were just specialists in their thing. So, just an amazing underwriter, an amazing acquisitions person, a really good asset manager, that's all they've done. And they have an amazing track record, and that's all they do. Because when you start a business, everyone's kind of doing a little bit of everything. And you really turn the corner in scaling when you can start using specialists and the best at what they do. And it may be that your early team isn't that. You may have had an underwriter for years that was good, but not great. And in some cases, as the company scales, there might not be a position for them. And so what Jillian was saying is she would make sure they had a very good severance, or she would offer other positions in the company that might be a fit, but that no matter what, the company had to come first, and it had to be the absolute best person for that job to make the company scale.
Excellent advice. Kathy, when is your book coming out and where can people find it?
It is coming out September 10th, but you can pre-order it. You can buy it at Amazon. I think we have a code, Fettke 10 or 20, I should know, where you can get that discount at Bigger Pockets, or you can get it on Amazon as a pre-order. And then we have, I'm going to be speaking with you in Denver, and we have our big book launch on the next day on September 8th in Denver. I don't know if this show will be out by then, but.
Yep. It'll come out just that. Book will be out just before we post this. But
okay.
But definitely check it out. I'm excited to read it. A lot of great golden nuggets that you dropped regarding the book. So thank you so much. Where else can people find out more about you and your company?
You can go to RealWealth.com to find out about our syndications. We're mostly in build to rent at this time, build to rent single family, and also just helping people build their portfolios 1 to 4 units at RealWealth.com.
All right. Thank you so much. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.